I'm glad to be here with the great panel that we put together, and thank you very much for coming. Just a quick intro. My name is Sasson Darwish. I'm head of convergence and Israel coverage for RBC Capital Markets. I'm based in New York. I've been in banking for 20 years, and we're one of the sponsors here for this amazing, really, first conference, and we hope to continue to do that going forward. I assembled a very nice panel to talk about going global. We're missing one of our panelists. He just texted me that he's on his way and he's late. He's coming from the city, so there's a lot of traffic. I'll introduce the panelists, and then we'll go into Q&A. And I'm going to leave about 10 minutes at the end to ask some questions, either specifically to the companies or to the people that are here, or to the topic that we're discussing. So. To my far left is Mark Arnold, which is head of corporate development for Websense, a multi-billion-dollar company. It's a private company. It went private a couple of years ago. Mark has been both an entrepreneur as well as a builder of teams, marketing, sales, business development for many companies, and he's doing that for Websense. We have Lisa Lambert. Second to my left, who has been in venture capital for Int'l since 1999. So she's invested in dozens and dozens of companies, has been on boards of companies, built businesses, invested in businesses, took businesses, to bankruptcy or sold businesses.
Not to bankruptcy. Come on. Even if that's true, you don't want to say it.
Okay. But you know what? Anyway, we'll talk about that in a second. And to my close left is Manav, who is an entrepreneur, sold a company a few years ago and started a very exciting company called Instart Logic, which basically does, it's the Akamai for mobile, if you will, if I can use Akamai here. So I think what I would like to start is really with the first question is, and we're going to be interactive instead of me asking questions and then each one answers. I'm going to mix it up a little bit. So Lisa, when you look at companies that you invested in and wanted to say, let's say here in Silicon Valley or in New York or in London, and they said, okay, we need to open an office, okay? Give us the top 3 things that you said you can do or you cannot do.
Yeah, there are actually a lot of examples of companies in the portfolio that wanted to go global. I think there are 3 fundamental things. One, you have to have some assurance that the market is monetizable, that there is customer demand for the service that you're providing. And I think people underestimate the importance of that because they think, well, I've had success in whatever region that I'm in, and so therefore I can transfer that success into a new region. And it's as simple as that. Well, there's business practices, there's regulatory practices, there's a legal system that you don't know about, there's a culture, there's different business models, there are different customer expectations. So all of those things are uncertainties that just because you had success in one region doesn't mean you're going to have success in another region. And so what I like to suggest is that if you are going to enter a new market, that you go in with a partner that gives you some sales leverage and gives you the ability to lower your cost, because it's just going to take more time and be more difficult than you can imagine. So that's one thing. Can you get the right talent? Do they even have the right skills? What's their HR policy? Is it a regulated environment? Can you hire and fire people easily? Do they even want to work at a startup? Right? What's the culture there? You need to understand that very, very well. I think people underestimate that as well. And then I'd say lastly, do you have the staying power to win in that market? Because it's going to take longer, it's going to be more expensive, and it's going to be more difficult than you anticipate. And a lot of companies, again, live off the success they've had in their local region and assume that they can be successful in the same ways in the new region, and they end up burning an enormous amount of capital to get there. They end up going in without that knowledge and having done the due diligence and without the partners to help them defray some of the costs. So those would be my top 3 things and what I advise my companies to do.
Mark, is there anything conversely to that you can
No, I definitely agree with Lisa's points. One thing that I would add that I have found successful is as you're going through this initial phase of decision-making, right, document it, put it into a business plan. That way you can get the right owners to really see what the other areas of the business are looking to do by going global, and to come up with a truly comprehensive and a cohesive plan that you can go and execute, and also to benchmark against to see how successful you have been, or things that you can change as you continue to try to improve or revector your strategy in the region.
Manav, do you have a business plan right now going global?
So even though we are a startup, we have been global from day one, actually. Our first 10 employees were across 4 countries. And today, we actively sell to, in multiple countries across 4 continents. And regarding your question, I completely agree with Lisa. All the points she mentioned, they're valid. However, the big X factor really is talent. For us, the big question whenever we go to a new region is, can we hire the right talent? Can we find good leadership with the right cultural elements that can mesh with the overall executive leadership in the company? And the interesting thing is, she mentioned this point about, can you dominate the market? Can you sell? Do you have the sting? It's very easy to test these things without having to actually expand your footprint into a new geography. Because the interesting trend in the market these days, that if you look at the mid-market, especially the tech buyers in the mid-market, they really want to eliminate a lot of the interaction with humans, if you will. Right? They want to sort of buy the product on their own, they want to test it on their own, provision it on their own, they want to troubleshoot it on their own. So you can have a lot of leverage in selling into an outside geography if you have like a current product with just an inside sales model and like this online collaboration tools, etc.
So I think the world is going more as a service, as we said, so it's much easier to provision and sell things through the internet without human intervention, if you will. But it wasn't always the case, and I don't think it's still the case, especially when you do big enterprise sales. Mark, how do you guys deal with that when we actually have like a salesperson to go and you need to hire the right team? How do you do that?
Well, I think we're somewhat blessed today. I mean, so Websense, we are a global cybersecurity company. So today we have over 1,600 employees in over 35 countries. Right? We work with over 10,000 resellers in over 124 countries. So from a global footprint basis, the ability to go into new geographies, to look at new customer opportunities, new vertical opportunities, we've laid that groundwork since 1994 when the company was started. So we have a lot of those elements in place that we can go in and test out new opportunities, new products, new types of sales solutions relatively easily and quickly, which has given us kind of a leg up in the marketplace today.
Lisa, do you have an example of a company, I'm putting you on the spot here, that had a strategy, didn't work, you had to go back to the drawing board and kind of redid it, and was successful when you look at all the investments you've done?
Sorta. I mean, the problem with the international expansion strategy is if you go in and you're not successful, it's very difficult to convince yourselves and your board that you could make it all right and do it again. But I'll give you an example of a company in the US. I won't name them, but they're a human capital management company. So this is, around the mid-2000s timeframe where a number of those companies were going public, like SuccessFactors and Workday and Taleo, et cetera. And this company was growing very well in the U.S., had great success. This as a category in the U.S. was being very broadly adopted. They had both medium-sized and large enterprise customers. And so you're a 30 to 40 million in revenue company. At the time they thought about, why don't we take this show on the road and see if we can make a global footprint here and grow our sales more rapidly, because the U.S. market obviously was becoming more competitive, with these newly public companies with a lot of capital. It was becoming more difficult to win here. So they decided to expand into Europe and Asia. And I think the challenge for them is, one, they didn't do what I said earlier. They didn't do their due diligence, not well enough, right? I mean, they didn't know the markets well enough. They didn't know the business practices well enough. They didn't know the legal system well enough. They didn't go in with a strong set of partners. I've seen companies actually form an global advisory board, a going global board, where they have people who either work at global companies or have worked at startups who've gone international. And these guys didn't really have that kind of infrastructure and support, and you really do need that to be successful. And so though they had a very compelling value proposition, and though they had, a lot of cash flow, free cash flow from the US business success, they didn't know enough about the markets they were entering, and they tried to take on two markets at the same time, two very large regions in Asia Pacific and Europe. And it was just difficult. The sales cycles were longer, the expenses were higher, the partners weren't as reliable once they got partners, and it was just more challenging than they thought. So they lost a lot of money. They've kind of leveled it out now. It's more stable, and hopefully they're on the upswing. But it was really difficult persuading the board that they should continue with those efforts, because they were apparently losing efforts just in terms of the capital they were putting into it and the return they were getting on that capital.
Great, thank you. So when you look at partners, do you include, is that a code name for potentially acquisitions? I mean, Mark, I know you've done few, and Manav, I would love to hear kind of your perspective, but Mark, can you talk about this partnership, like, buying your way into a market?
Sure. We've leveraged that at Cisco. We leverage it at Symantec. And I think it's a very easy and a very credible way to gain access to a market, to gain access to talent, and give yourself, depending upon how the market is developing, give yourself the time and the leeway to see how it develops, and if this is the right strategy, if a buy strategy is the right strategy for you, as opposed to doing a build strategy or continuing on with a partner strategy. So it buys you a little bit of time in the marketplace, allows you to get more familiar with the team, get more familiar in terms of how you could potentially execute on such a strategy internally. So yes, using investments as a means to strike partnerships has been successful. I mean, I think at Cisco we probably executed or acquired, I would say 30 to 40% of the investments that we had, they were internal acquisitions. So it was a very successful tool.
Any particular geography that you guys liked or have done those that made sense, vis-a-vis just hiring people on the ground?
Oh, sure. I think, naturally, I mean, with a company the size and scope of a Cisco Systems, right, we had a philosophy to look for acquisitions that would be close to one of our technology hubs, right, whether that be in the U.S. or abroad. I think the same philosophy applies to most other strategic acquirers as well. I mean, we have engineering sites in Israel, China, Australia, Great Britain, U.S., so naturally that kind of flavors your perspective around where you want to look for talent.
And Manav, when you look at your previous company and how you grew it, can you kind of draw parallels to what we just heard from Lisa and Mark?
So one thing which is kind of different when you're at a startup, right, is that you can't buy your way into a market, right? You just can't. So the question that we try to answer, right, we do a lot of A/B testing to figure out if there is actually a demand for the product in this new region that we're going in. And both times we were lucky, we found that there was demand. Then the other question that we tried to answer is that, how do we fulfill that demand and how do we support our customers? And, and once we had some good handle on the answers to those questions, that is when we went out and we actively solicited partners and figured out what the right channel was. And then we started nurturing those. But that's how we went about it.
Okay. Now, when you look at kind of the current situation of being able to raise money and potentially do acquisitions, you see a lot of startups, not startups, but companies that are not public, that raise a lot of money and do use it to acquire their way into markets. And Lisa, I know you probably have a couple of examples, which I would love to hear. How do you reconcile that in terms of timing when you look in the 90s and today?
Yeah, that one's a tough one because, but there probably are some examples. I mean, there's a company that I can think of, a U.S. company that was a public cloud company. You would know their name if I mentioned their name. It was in our portfolio. And, they're doing exceedingly well, right? Public and private cloud solution. Doing exceedingly well in the U.S., a brand name. And decided to expand into Europe. They had capital. They'd raised a lot of capital. They had a lot of free cash flow, so they were able to do it. They decided to build in Europe. They were targeting Europe and parts of Asia, China initially. And again, going back to, did they do their homework? Did they really understand the market and how customers buy and the issues that, you face when you're building capacity in a new market, right? They were building a very large data center in Europe. And they built this data center, but the error that they made was they overbuilt it. They built it based upon a demand profile that was really unrealistic. So they asked the question that you asked, is there demand? The answer was yes. But they overestimated the demand that was actually available, and the amount of time, I think more realistically, the amount of time it would take to actually close on those transactions. So that data center sat, built, shiny, new, great looking data center sat for almost a year underutilized because they did not anticipate some of the problems they ultimately had in trying to close business and getting the capacity filled. So it's, it's a mixed bag. I mean, I think if you have to invest that kind of capital, you really, really need to know, right? If you're going online and, there's very low entry costs, that's a completely different business model. But when you're a hardware-centered organization, you need to be aware because things will play out differently than you anticipate.
So going global is not only, I think, selling, but also developing. So a lot of times you have developments in other countries, either Eastern Europe or China or Thailand or India. How do you, I know there is a lot of answers and it's a whole gamut of success and failures around that, but I would love to hear from each one of you a little bit of your experience vis-a-vis doing development or going global on the R&D side. Maybe Manav, we can start with you.
Yeah, so as far as development goes, right, so it really matters on, whether you can find engineers and developers with the right kind of a profile in the region that you're going in. And the cue we typically take is we sort of, we kind of map out what are the kind of companies that we want to frankly hire talent out of. So for instance, when we were starting out, the first question we had to answer was, where do we put our headquarters here in the Bay Area? From San Francisco all the way to San Jose, where do we set up our office? And when we looked at all the companies, right, we realized almost it's like a stack, like all the top of the stack guys are in San Francisco, and essentially you're traversing down the stack all the way to the semiconductors and the chips when you go down to San Jose. So we picked right in the middle of it, close to Google and Symantec and all these companies. That's where we thought we would find all the infrastructure engineers. It was pretty good guess, right? And whenever we want to expand, that's the decision criteria that we use. Where are the companies with the kind of projects and the kind of products that we want to build that we can hire people out of, and that's where we set up our offices.
And what about, do you have development overseas?
Yes, we do.
Where?
We have development in 4 different countries. But the bulk of it is in India and in US.
Okay, and you hired those people, or these are people that you knew from the past? Like, how did you build those offices?
So to start off with, in every place that we have gone to, and at different times we've employed people in Israel and in Italy and in different places. So our first couple hires were always people from the network, always, without exception. And once we had like an initial kind of an entry point in those regions, what we did was we spent a substantial amount of our executive time or founder time in those regions to kind of really make sure that, that the cultural elements are set up correctly, and those early hires, they're in tune with our overall company vision and they adhere to our characteristics and all that. And then we could just leverage the local recruiters and the network that those folks had to grow our teams over there.
Thank you. Lisa?
Yeah, actually, this is a really interesting example. This is a company that was a Swedish company. It's a mobile point-of-sale company, so they sell software, hardware, and services for mobile payments, essentially. So they started in Sweden, and obviously had all their R&D and all their talent there. And then they expanded to 9 other countries in Europe. And I mean, I think there's actually an advantage if you're in Europe and you expand in that region, because you have to deal with a lot of the issues that you would around culture and language and, different policies and different regulatory environments. You have to deal with it in that region, but you know a little bit more about it because Europe is a little different than, going from, from the UK than going to Asia. So they knew a lot about internationalization from a regional standpoint, and I think some US companies and other companies might not know. So they expanded successfully, and they expanded by expanding talent, research and development, and then moved sales and business development into those regions. And then they expanded into Latin America, so they're in Brazil. Because they're in the mobile payment space, and you got to think about the U.S. And in the U.S., obviously, they compete with Square if they're going to come into this market. They haven't entered the market yet, but for the last 2 years, they've been studying the market very closely. And a number of things have happened in mobile payments. Card present only is the model that Square has benefited greatly from. But the policy here, like in Europe, is changing. We're going from card present only to EMV standard or chip and pen standard. And this company excels in that. They target the small and medium business segment, but they excel in that, and they built their business around that method. So they view it as an opportunity, one, and a window is opening because we're going to standardize EMV in the U.S. starting October 2015. So it's a window of opportunity to come into a market, though it's dominated by Square. Square does not have an EMV solution. They're going to either have to build it, which will take some time, or they're going to have to buy it. So they've got a window of opportunity to come into this market, even though it's broadly dominated, but to enter the market based upon this window of opportunity around this new standard. And they've been studying it. As I say, for 2 years they've been studying this market, and they built relationships, including a relationship with Int'l and a number of other big companies that you would know. And they're going to come in with a lot of intelligence, with a lot of knowledge, and with a regulatory policy that I think will give them an entry that they wouldn't normally have. So I think that yet to be proven whether they're going to be successful here, but I think their strategy is very sound, very fundamental, lots of due diligence, lots of great relationships, and always entering new markets, leading with R&D, but then having a partner to go in with. So, time will tell on whether they're successful in the U.S.
Thank you. Mark?
Yeah, I think one of the things that I've seen that has worked quite well in terms of managing a global R&D organization. So, as I mentioned earlier, we have very large R&D centers in Israel, China, U.S. And how do you coordinate that? I mean, we also just did a headquarter move recently from San Diego to Austin, Texas. And so naturally, with all of the movement and the chaos, how do you really continue to keep those strong ties to your regional centers? And I think a key thing that has really worked for us is this notion of having subject matter expertise in the regions. And how do you facilitate the ability for them to coordinate directly with the product management organization? So we've worked very hard at that over the past couple of years, and it's been very effective. And so not only with R&D and making sure that we've got close coordination back to headquarters, we've also now expanded it to field sales, making sure that within the regions we have very clear, consistent, not only messaging, but also technical and product literature to really explain the customer solutions that we're trying to implement and the problems that we're trying to solve. So it's been very effective for us.
Great, thank you. Vic just joined us from Adobe. I'm going to direct a specific question to you. So you've done probably 10 transactions at Adobe, right? And you're traveling all over the world, and you're hard to pin down. And thank you very much for coming. When you look at Adobe and kind of where your R&D centers are, because we talked about R&D, and where potentially you want to expand, does that bias you to areas where you only have R&D, or you're okay going into areas that you really have no presence?
Sure. First off, sorry about the delay getting here. It's easier to go around the world than getting from San Francisco to here sometimes. But to the specific question of the R&D side, I think it definitely biases us in the sense that you start with hubs, R&D hubs you already have. And I think for us, the Bay Area is a big one, Utah is a big one. But what also happens is as you do acquisitions, you bring in talent and you bring in large masses of expertise, which doesn't always reside in the locations we already are in. So if you look at where we've built hubs, Paris is a hub now that came through Neolane, we didn't plan to make Paris a hub, but we did the Neolane acquisition, which came with a lot of talent in France, and it seemed like a good place to start building presence as well. And then we have a big hub in India, given that we had moved a lot of our maintenance mode stuff in the past over there, but then we started to develop some good talent in specific areas, so we built that out. So now when we look at our global footprint, we have about 4 or 5 hubs, which are kind of core R&D. And I think when we look forward, we will continue to have the same approach. We'll try to build organically in these centers, but when we look at acquisitions and other inorganic ways to grow, we will end up having hubs outside of these centers as well.
Yeah, and I want to tie it back to Israel, of course. And being from there and talking to all the big multinationals, Israel is always an area where if someone does not have, an R&D center, they say we would love to buy something in Israel, to start something there, to tap the talent. A lot of the people that are in Israel, a lot of them are also, they either were here, fly here all the time. Here, I mean the U.S. in general, either West Coast or East Coast. So it's something that I as a banker, hear a lot, and I know the talent in Israel is very, very valued. And can I maybe ask you guys, what's your view, and of course it's going to be a positive view, of the talent in Israel? Mark, maybe we'll start with you.
Loaded question. But I would say, like I said, I mean, we went into Israel in 2007 through an acquisition. We've done subsequent acquisitions there since then. And so we look at it as one of our major R&D hubs of our organization, and continue to look for talent and opportunities in the region. Very important for us.
One thing, so do you see, is it only R&D, or I've heard few companies also using Israel as a sales hub to go into Europe and the Middle East? Is it only R&D, or you guys are using it also as a sales hub?
Also a sales hub. I should clarify that.
Lisa?
Yeah, no, we do a lot of business in Int'l Capital in Israel. We actually have 3 people there, actually maybe 2 now, but we have, in terms of the size of the region compared to some of the other regions, it's a loaded region for us. Lots of investment candidates. We've got a couple that come to mind that are in the portfolio: Gigaspaces, Panorama. We've had a number of companies in that region founded there. They come to the U.S., generally to one of the coasts, and start to expand. But they have it down. They have the model down on how to develop technology in the region, prove that it's monetizable in the region, and then go to the U.S. or go to another developed market. So I'd say, if anybody could write a book on that, it would be Israeli founders, because most certainly you've got that down to a science.
Thank you. Manav?
Yeah, I definitely think that Israel has a lot of very strong tech talent. In fact, one of our first 10 employees was out of Israel, and he was a very strategic hire for the company. So we are a SaaS company in the application delivery space, providing like mission critical infrastructure solution for companies whose business is online. So we need to make sure that the service doesn't go down, and from the get-go it has all the 5 nines of reliability, and we have all the SLAs. So we wanted to really hire somebody who can help us build that infrastructure from the ground up. And we found this guy through our network who was out of Israel. And we were like this small, scrappy startup in the Bay Area. So I heard from my friend that he was going to fly to the Bay Area from Israel to meet with somebody. And I basically intercepted him at the airport. And I sort of, stood with him in the sort of check-in place, sort of convincing him, hey, you need to join us, leave whatever drop whatever you are working on. And he did join us ultimately. I think he just wanted to get rid of me. So, and he became an invaluable early part of the team. So yeah, so I think very highly of the talent there.
Vic?
Yeah, I think for Adobe, we don't have a big presence in Israel at this point, but Sas, you and I have talked a lot about opportunities there in terms of acquisitions and investments. And I think we haven't, it doesn't just happen something there, but definitely on the radar, and definitely around specific areas where there's a lot of great talent, a lot of good companies and startups. And it always used to be in security and ad tech, but I think it's also a lot more these days in data science and any big data efforts. So we continue to look for that, and at some point I can't imagine us not having a tech hub in Israel.
Great. With that positive note, I'm going to turn it to the audience for maybe 5 to 7 minutes of Q&A. So please, and you can direct it to anyone. If not, I'm going to continue asking questions. Nothing? Yes.
What role does sort of institutions of higher education learning, how does that factor into whether or not you decide to invest in a new tech hub, this Sorbonne or ITT or Technion? Do sort of institutions of higher education really factor greatly into whether or not you choose to invest in particular places?
Yeah, let me repeat that. So the question is the presence of higher education hubs or universities that have or create good talent a factor in going into a region? Mark?
I'd say definitely. I mean, it's one of many factors. It's definitely not, I think for us, given the size of our company, we don't do partnerships or R&D development with universities or have funding programs. But definitely in terms of being able to be in a region or a location that is close to talent excellence is definitely ways in our decision-making process, particularly for acquisitions or investments.
Manav?
Yes, so I think it is one factor, but the bigger factor for us is like, are there other companies who are working on similar products, and like in general, is there like enough talent out there? And an interesting example of this is actually in India. So in India, I may upset some people, but some of the most prestigious institutes over there are the IITs, right, for technical talent. And if you look at the IITs, there's no IIT in Bangalore, but Bangalore is like the biggest technical talent hub in India, right? So you don't go to Bangalore because there's an IIT there. In fact, you don't go to Kanpur just because there's an IIT there. You go to Bangalore because there's lots of companies over there. So that's a bigger consideration for us.
Lisa, you probably, as an institution, fund a lot of, or sponsor a lot of programs in different universities. Is that something that you take advantage of when you think about thinking about your portfolio companies?
Yeah, well, Int'l Capital doesn't, but our corporate affairs group does. So we've got relationships with all the large universities in pretty much every region where we sponsor projects that are aligned with Int'l's interests. We do a lot with Berkeley Labs. We do a lot with Stanford. I mean, outside of the U.S., obviously, with the equivalent schools in those regions. So very active in that regard, developing technology that perpetuates the assets of Int'l Corporation, Moore's Law, our core IP around computing technology. So very much engaged there. From an Int'l Capital standpoint, not as much. I think the points mentioned earlier around are there enough companies there which represent the technical talent? And is there an infrastructure of venture capital firms, service providers, OEMs, et cetera, so that when we do invest in a company in that region, they do have the capacity and the ecosystem to kind of support and enliven their business opportunity. Those are some of the things that we, from an equity standpoint, think are a bit more important. But, the higher education institutions obviously are a source of talent, so that's important as well.
Yes.
Okay, so my question is that for offshore company come to Silicon Valley, I believe that your strategy remained the same. We need to find a partner here in Silicon Valley, if I heard you correctly. Now, the partner-wise, should we go for mid-size or large-cap companies or any size? That's one question. The other is how open you guys, from U.S. corporate perspective, that open up your partnership, the availabilities with the companies, small size, offshore. So I don't know how much. My third question to that is what is right channel to get that access if there are opportunities?
Okay. Anyone? Let me repeat the questions. The questions were for an offshore company that is not in the U.S., what is the best way to partner, number one, with size? Do you partner with a smaller or a larger company? Number one. Number two, what's the channel? Like, how do you do that? Like, who do you connect with? Right? Yes. Okay. I'm sure you, again, I think most of the team here is more on the corporate development side, but maybe Manav, I don't know, have you gotten calls from people? overseas to partner?
Often get a lot of emails that I delete, but not no serious calls. But so I don't have a first-hand experience with that issue. But the way I would probably think about it is, like for me, I would just try to go knock on a lot of doors, try to meet with a lot of people, and find some sort of a potential partner or channel where the objective is very well aligned, right? Like somebody who's trying to, in some way, fulfill the same demand that you are trying to fulfill. And somebody who would be focused on solving that problem, who cares about solving this problem, and that's probably the best way to go about it. I can't think of a good algorithm for this.
Mark?
Yeah, no, I would agree. I think it really depends on the problem that your company is trying to solve, and trying to find a partner overseas that basically has thought about the same problem that you're trying to address as well, and how much value can you bring to their customer base, whether that be small, medium, or large size. So I think it's really going to be opportunity dependent. From a how do you source, I definitely agree. It's a lot of hitting the pavement, making phone calls. It's trying to have a presence here. So I know it can be difficult at times, but being able to have someone on the ground who can be accessible and reachable and do the outreach, because it's going to take a lot of time and effort.
Vic, I know you get a lot of inbound, not only on the M&A side, but also on the partnership side. How do you do that in terms of qualifying and going forward with the partnerships?
Yeah, no, I think definitely we get a lot of inbound, and I'll be honest, I think coming in cold for a larger company in the US would be kind of difficult to get engaged with. I think the best examples where it makes it very easy for me to push it through would be situations where there are customers of ours who see value in working with the smaller company. So if there are any potential integrations, they're pulling data from one into the other, or even if it's one customer, if there's a good use case, that's easier for people to grasp around versus there's another company, it's in an adjacent space and they want to partner with you. I think there are tons which fall into the second bucket, but when you have customer use case examples, I think you get something more tangible.
Yeah, for startups, that's really important. The best examples in my portfolio of successful expansion strategies have been when customers, they're multinational companies largely, have brought them into a new market. They had the demand, they had the relationships, they had the channel, they had the resources. So you got the sales leverage, you got the lower cost, you got the scale kind of instantaneously because your customer brought you in to solve a need that they were having in that region. That's a great way to expand, very low cost, and they bear a lot of the burden of the expansion.
Right there. Yeah, 1 second.
Mark just mentioned a moment ago the idea of having presence in whatever new market you're going to. I think high relevance for this audience is when you're making that move, when you're actually expanding as the technology develops locally, especially in Israel, and then you finally make that move. And there have been various, I think, successful examples, of Israeli companies that have come to wherever they go, if it's either coast or to Europe or wherever they go. You guys have opinions on the right strategy. Does everybody come? Does the CEO come first? Do you hire that first VP sales or marketing on the ground, that president of North America or Europe, wherever you're headed to? What's the general consensus here as to whether there's a right strategy, one better than the other, et cetera?
So I'll redirect the question in a second, but maybe we'll start with Vic, because Vic has been looking into companies in Israel, and he's done diligence, and he's met many of them. I think if there is, as far as I understand, a real need that has not been met internally with the existing R&D infrastructure and projects at Adobe, then it's something that they will probably do. So, and they'll go big. So they'll buy the whole company, they'll keep the company there, and they'll expand on it. And Vic, if you can maybe answer that. And then I think the rest of the team here has probably different answers to that question, but go ahead.
Yeah, and are you asking specifically around which of the different functional areas are key to have a presence in?
I'm looking at kind of early and mid-stage
Got it. So yeah, I was going to say, I think, again, going away from the acquisitions perspective, when you look at companies which do scale and which are impressive, at least from when they hit my radar and we start, looking deeper into, I think the sales presence in the region becomes a big part, right? I think if you're going into market expansion, those leaders are very important. And when we look at the company, the CEOs tend to always have a good storyline, and they're able to tell the story, and a lot of impressive CEOs. I think where it's important to kind of stand out is actually in the engineering side, to get a sense that you have a team where the engineering lead is someone who can really command the audience in the room. And I would say after that comes in the sales for the specific regions.
Lisa?
Yeah, I wish I had a pattern. There really isn't a noticeable pattern, having seen many, many companies go into different regions. But some of the BKMs that I think are worth sharing are, go where your customers are, go where the market is. So I mentioned a couple of Israeli companies, Gigaspaces, for example. When they expanded to the US, they were a grid middleware company targeting the financial services sector. So you can imagine where they went first, right? They went to New York City. And their CEO came. And then their VP of marketing came. And their VP of sales came. So they were very customer-centered. Go where the revenue opportunities are and bring the people who are responsible for delivering the revenue first. That model worked pretty well for them. Then they expand to other parts of the U.S. and other countries after that. But then I have other examples where the CEO and the COO, the senior leadership stayed in Israel. And they brought more junior people into the region. And that model worked reasonably well as well. So I don't know that there is an exact copy-paste method that I can give you. I think it's situational. It depends on the product, depends on the customers, depends on the technology and the competitive landscape, the markets that you're entering. You need to consider all those things. That's why that diligence, that research, talking to as many people as you possibly can really does help, because it will inform your strategy. And it's just, it's too unique to have a set of guidelines that you can use in every case.
Yeah, I just going back to your question, and I thought I answered it wrong because I didn't understand the question. So as a banker, when I go and I pitch business, and when you go to a big company, it's really more about finding innovation and finding a product set or technologies that they're either working on, thinking of working on, or would like to have. Your question is really more about middle or smaller companies or mid-sized companies that are looking for mini-me's that are around the world and say, okay, instead of just hiring someone and building just buy them and we'll scrap the R&D or scrap our R&D or whatever it is and then grow into that. So I see a lot of that, and that's more difficult if it's a $500 million, $200 million type of company. To do that bet, it has to be a really good bet, and to find this little mini-me that does the same thing that I'm doing, but in a very good way. But maybe it's a different code or different set of customers or different. It goes into the details, if you will. And I know Mark always looks at that, and maybe you can comment on that, and I think we will conclude with your answer.
In terms of the acquisition of mini-me's, now we're getting to movie themes. I think it's one of many strategies in the playbook that we definitely look at. I think finding talent, finding these hubs, again, critically important. Israel is a big part of that equation for us. Particularly in security, right? As Lisa had mentioned, you see, very strong focus on following the customer. Where is the demand? Where's the opportunity? So if someone is looking at the financial services sector, again, very lucrative if you can get into one of the banks. That's where a lot of emphasis we've seen, where they would send over a CEO, they would send over a VP of marketing or sales, at least initially, in keeping R&D still hubbed back in the region. And so we see lots of entrepreneurs, again, back and forth between the two countries. And I think that's just great opportunity. I think that's just speaks around the richness of the talent, the richness of the opportunity both here and abroad. I think that's why I think us and the rest of the panelists, I mean, we're very excited about the ongoing opportunities that we see, you know, in Israel and what we can do to continue to strengthen those bonds here in the U.S.
Thank you very much. Appreciate your time. Thank you very much. Let's give a hand to our panel.